Listen, I know what it's like to start off trading and be completely lost, especially going into a trading day and have no idea as to what you're going to do and how to capitalize and actually how to make money in these markets. Now, I've been trading for almost 6 years now. I've experimented with multiple different strategies. I've bounced around and I've found multiple different pieces of a puzzle and put them together to finally get a clear picture as to what I know works and what I know doesn't work. Now, in this video, what I want to do for you guys is kind of show you in a complete top-down approach as to how I approach a blank chart and how I'm actually finding the most high probability price move and execution that I could be making for that given day or that given week. Now, this is the first week of the month for June, and it is also NFP week. And for people that don't know what NFP is, non-farm payroll, it happens on the first Friday of every single month. It is a extremely volatile trading day with a high impact news event that happens at 8:30 that typically sets the high or the low of the month. Now, when you go into these fresh months and these fresh weeks with NFP on that Friday, you want to kind of tread with caution and look for your executions earlier on in the week. So I'm going to walk you through as to my mindset for this week, my entire analysis, how I was able to capitalize on a move on Euro USD, and how I was able to push aside the other pairs that I primarily focus on, which is NASDAQ, the S&P 500, gold, and silver. I only trade 3 certain sectors of the market. I trade the Euro, the pound, the gold and silver, and then the NASDAQ and the S&P. Those are the only 3 categorized SMT pairs that are correlated that I trade. So let me walk you through my entire top-down strategy as to how I'm able to do my analysis to a high probability execution that has gotten me to the point of trading full-time. Let's hop right into the charts. All right, so the first thing that we're gonna do here is when we're monitoring the euro and the pound, you want to be having a foundation and understanding as to what the dollar index is doing. The dollar index moves inversely to the euro and the pound. When the euro goes up and the pound go up, the dollar should be going down. So if we're looking at the dollar index, I always start off my charts from a weekly perspective. And as you can see, since for weeks now, I'm on a weekly chart, how has the dollar been trading? The dollar has been trading in bearish order flow, consistently making lower lows and lower highs. And as you guys already know this, price does only one of 2 things. Price rebalances imbalances and takes out old highs and lows. Now, in this situation with the dollar index, what have we been doing? Again, making the lower lows and lower highs, but also doing what at the same time? We've been tagging imbalances, taking out old lows. Tagging imbalances as we have here in this week, and then what we'll be looking for next? Taking out another old low. This is an internal range liquidity pool, drawing down to an external range liquidity pool. Simple, easy, internal to external range moves. That is the whole foundation as to how you develop high probability biases. Now, since this is what we're looking for on the dollar index, this weekly external range low from 97,925 at the tag from what you had here, we want price to continue in its bearish order flow. So if we are anticipating lower prices on dollar index, we are going to anticipate higher prices on the euro and the pound. So my bias and my narrative as to what I'm already looking for on the dollar index is now confirmed to just see, is structure on the euro and the pound aligning with my bias on the dollar index? And as you can see, if we're consistently making lower lows and lower highs, I want euro and the pound to be making higher lows and higher highs. So if we go from the weekly chart to the daily, how are we performing? So we're currently reviewing a trade that happened on Wednesday the 4th. Now this is price action replayed before that Wednesday. Now going into Tuesday's price, what did we do and how has price formed its structure going lower, and what PD arrays do we actually have referenced to also confirm lower prices? What is currently going on here? So we had price take out these lows resting here, and then after we took out these lows resting here, we displaced relatively higher, creating a daily bullish fair value gap. But since we're still looking for lower prices and the higher time frame trend on the weekly is bearish, we're not going to anticipate this gap to hold. We actually traded through this gap on Monday, and then Tuesday came back into it. So we want to see this old gap be used as distribution, not accumulation. So we're anticipating the next daily candle to sell lower, to take out these lows here, and then potentially get to these lows on the weekly external range low. So that's kind of the top-down analysis that I'm doing. It's just developing a bias that is backing a euro and a pound long position. So since I've kind of developed framework as to how I'm going to capitalize or what I'm going to do on the euro and the pound, I know that I'm going to look for longs on euro or pound, but how am I going to frame them? Let's go into the charts on euro and pound and see exactly what is going through my mind and how I'm actually able to hit that buy button. So here's a weekly chart on the euro and the pound. Now, obviously, what have the euro and the pound been doing compared to inversely correlated to the dollar index? We have been making higher highs and higher lows. And how we've been making higher highs and higher lows? We have been taking out old highs and rebalancing imbalances. We have rebalanced an imbalance here, take out an old high. Then what do we do next? We have a new imbalance here. And what are we anticipating price to do next? Take out another old high, which is this weekly external range high at 115.736 on the euro. And the dollar index, this is lining up with the dollar taking out that weekly external range low. Now the same thing with the pound. The pound already took out that weekly external range high from this weekly internal range liquidity pool resting here from the previous 2 weeks. And in this case scenario, since price has been bullish, and you guys might already be saying this, Matt, there's SMT at the highs. Why would you be looking for longs continuously? I'm going to continuously look for longs and anticipate the correlated asset to go higher until we have a violation of a higher time frame PD array, aka a fair value gap like this on the weekly to be closed off and created into an inverse. Therefore, at that point, I will then be bearish. But until then, I'm going to anticipate the euro to play catch up to that weekly external range high because all we have been doing lately is been in a bullish trend on both the euro and the pound. And guess what I'm not doing? I'm not trading in the inverse direction of the higher time frame trend, which is making higher highs and higher lows. Key factor there, just because one pair is taking out a high and the other pair did not, does not mean we are automatically going to be reversing from a certain point. Let's say if price did take out this high or didn't take out this high on the euro and the pound did, but we made a lower high inside of a fair value gap, that would have been a different story. Then I would have said, okay, I would maybe anticipate price to reverse from here because we would be reversing from a key level that had SMT. The fair value gap with SMT is the foundation behind your trading. But in this scenario, there's no fair value gap. It's just a high. So I'm going to anticipate price still moving to 115.736. Okay, so what we just did there was build a weekly narrative. We're trying to see how is the weekly candle going to form. And since we've kind of anticipated the fact that we want the weekly candle in the dollar index to form an open high low close to go lower to that weekly external range low, and we want the euro and the pound to form a weekly open low high close. We want to see price trade higher. So now I'm tying in and I'm comparing the weekly to the daily to see how can I capitalize on an intraday move en route to that weekly external range high. So I'm going to analyze the euro and the pound side by side. What is going on here? How can I capitalize on that move? So if I compare the euro and the pound, I see one thing on the pound that the euro doesn't have, and that is price trading into a daily bullish fair value gap that we have resting here. And inside of that daily bullish fair value gap, there's SMT at these resting lows here. So we have the pound making the higher low, and we have the euro making this lower low resting right here. That's SMT. That is a cracking correlation between two correlated assets, and that confirms reversals at key levels. When SMT is present at a previous daily low run or at a previous daily high run or at an internal range liquidity pool or external range, you'll see an energetic reaction 99% of the time. And if we look even closer as to the start of our trading week and when we actually capitalized on that trade, which was Wednesday, June 4th. What are we looking at? We have GBP USD having this daily external range draw from this internal range liquidity pool that had SMT. But our trade was capitalized here. And what did price do? Let me compare the previous daily lows. We had GBP USD making a higher low, while the euro made a lower low on previous daily lows. SMT divergence even more here and here, while GBP was inside of a daily key level. So in this case, I'm going to anticipate price to trade higher on that Wednesday the 4th. So I just tied a weekly and a daily to then frame a narrative as to how I'm going to capitalize on the lower time frames. So all we're doing going into that Wednesday's trading day is we're watching to see and how we're reacting on price when we're creating the SMT at the previous daily lows. So what I'm going to do next is I'm going to go to my 4-hour chart and I'm going to see what is happening at that previous daily low. What is structure looking like? Is there any 4-hour or hourly key levels that I could frame my trades off of en route to that daily external range high on GU or the previous daily high on EU? So here's the 4-hour chart compared to EU and GU. Now this is the SMT that was set in at the previous daily low. As you can see, the lower low set in on the euro, the higher low set in on the pound. Now note the difference here, and you guys also might be wondering, Matt, why are you focusing on the weaker pair and not the stronger pair? The reason truly behind this is the fact that we're relatively closer to the drawn liquidity on the pound compared to the distance that we are on the euro. Euro has a lot more room to run compared to the pound. In my opinion, this was the maxed out daily objective that we could have reached on GBP compared to where we could actually reach on the euro. So I wanted to prioritize EU also because I liked how we were forming structure on this 4-hour chart going into the New York session. And you're going to understand when I say this at another step here is on the euro, we had a 4-hour bearish fair value gap resting right here that we closed off during the London session. So going into New York, my anticipation was me thinking to myself that since London has already ran all these lows here at previous daily low, and we violated a bearish PD array in a bullish higher time frame trend, like I showed you guys on the weekly and the daily, I'm going to anticipate New York to continue higher based off of how this structure is currently trading. So what I did from this point on is noticing how we still have we have a flat top high here at 114.434, and we have that relative high draw with the relative equal highs on GBP USD. I'm going to focus more on the euro. And another thing that I also didn't like, I did not like how wick heavy we were in price on GBP. This more looks like consolidation in price. This is not as wick heavy with bigger bodied candles that outweigh the wicks. That means that there's more displacement, there's more one-sided direction rather than chopped ranges, which would be very vulnerable for me to get stopped out if I got into a position, especially on GBP, noticing this. So I just kept my focus on euro. And since we're on the 4-hour chart, we're going to drop to a 15-minute chart just to see how is price reacting on this time frame going into the New York AM session starting at 8 o'clock. All right, so here's the 15-minute chart on euro on the left and pound on the right. Now, as you can see, like I said before, I didn't want to participate in GBP because you could see how chopped and more so of an accumulation stage this looked like in movement to that daily external range liquidity. As you can see on the euro, we had a run of the lows here, a liquidity sweep that created SMT at the previous daily low. We had energetic displacement after, with price retracing into a 15-minute bullish breaker that we have here, and then price bouncing again. We also had 8:15 high impact news, which was this big up close candle resting right here. And with that being a driver for being bullish price action to then give me the initiative to think that going into New York, why would I fade this move with price closing so energetically higher while also having SMT down here that was created during London. So if I look even closer and I deep dive even more as to what was going on at this time and price, we had more SMT that was set in at the news release. We had a higher low set in on euro while the pound made a lower low. So we pretty much had like a momentum SMT, almost giving us a more inclination to believe that price should not be taking out this low. We should not be taking out this low now. So I have now just labeled protected lows to understand if price goes and cracks below that level, my bias is invalid. So now going into the charts and looking, where am I going to get a trade-off? I utilized a bullish breaker in this scenario that aligned itself with that 4-hour inverse fair value gap. Now, if I look closely and I watch as to where and when could I possibly get in, I'm looking to get into my trades on foreign currencies past the time of 8 o'clock. And I was live streaming to my Discord at exactly 9:15. Now there was this up close candle from 4:30 in the morning. I drag it out in time. What is this candle representing to me? A bullish breaker block. Why is that a bullish breaker block, Matt? Because price on this candle was the highest green candle before price took out a resting low here while creating SMT at that resting low with GBP. So in this point is what I alerted to my Discord, and I was like, guys, I'm going to take longs on the euro at the tag of that 15-minute bullish breaker block. And what is going to be my stop loss? My stop loss is going to be at the SMT low that I told you guys before right here, that if price traded below this, that would invalidate my bias for the day, because I always want to have my stop loss at SMT lows or highs. That gives me confidence in knowing where price should go and where it shouldn't go in retrospect to my draw on liquidity. So my stop loss is resting there and my take profit is shooting for all of these highs up here, looking for a 2.35 risk to reward. And if you guys already know this, how does a market maker model perform and what are the stages of it? There's a smart money reversal. There's a low risk buy, there's accumulation, and there's reaccumulation. There could also be multiple stages of the reaccumulation stage, but typically there's 4 stages to a completion of a market maker buy model. And in this stage, we were at a smart money reversal that created SMT at the previous daily low. We had a low risk buy here into this 15-minute bullish breaker that also had SMT set in at the news. Now, there was another news release at 10 o'clock that could be listed as a potential driver for then price to then go higher after already tagging and displacing from the first news driver. So when I alerted it to my Discord, I was long here. This was my tag in. And you guys also might be thinking, Matt, isn't it risky to execute before news? And like, should you not be waiting for after the news release? Yes and no. It's dependent on which news driver you're talking about. If it's before FOMC, CPI, or NFP, I am not executing before those news drivers. But if it's any other red folder news, I have no problem laying on the risk if structure is aligning itself properly like I have here. If I have a set in stop loss that is listed at a protected lower high, I am confident as long as the draw on liquidity is clear to me. So in this case, I had no worry and I had full confidence in my execution on the euro because structure was lined with the draw on liquidity and I had a comfortable stop loss that had SMT placed there. So let's play out price just to see what is happening and what happened actually at that news release at 10 o'clock. And boom, 10 o'clock news came in, energetic displacement. Now what I also had here is listed partial points as to where you can take a piece off of your position and then go break even, which was this resting high here on the sell side of the curve. And 15 minutes go by, and as you can see, we take out that high. So at this point in price, I've taken a piece off of my position and I've reduced my risk going break even right there. Now, for the people that can't swing positions, this would be a point where you could either close fully or leave the runner until the end of the day because it was getting close towards the end of that London close, which is 12 o'clock. Now, this would have netted you a 1 to 1.37 risk to reward, which is still better than nothing. It's still better than a 1-to-1, But for the people that were able to hold the position, let's see and watch as to how price played out if you held it and swung it, with this being the draw on liquidity at 1.14547. And just like that, holding it into the next trading day, we smooth ran to that previous daily high. We had our smart money reversal at the previous daily low. We had the low risk buy at that 15-minute breaker. We had accumulation at another 15-minute breaker. And then we had reaccumulation inside of this 15-minute bullish fair value gap. As we consolidated within it, retapped that 4-hour inverse fair value gap, and then bolted to that resting high, like I said. Now, all you really need to focus on here is when you have a strong conviction bias and you're tying in the higher time frame and every single time frame on top of that, you are going to have the best trades that you could possibly think of. These are how you build full confidence in your execution. You're doing a complete top-down analysis view. You are just making yourself more and more confident to press that button because you've already done all of the work. You said, okay, the dollar index, which is this correlated asset, has been trending lower on our weekly chart. And then we have the daily chart, which also is respecting bearish PD arrays. And we still have yet to take out a weekly objective point. Now we go to our correlated pairs. What are our correlated pairs doing? The weekly chart, making higher lows and higher highs, creating SMT divergence inside of fair value gaps on a weekly chart. On the daily chart, doing the same thing, creating SMT divergence inside of a bullish fair value gap. And on top of that, yet to take out that daily external range high, we have created more SMT en route to that draw on liquidity. Now, if I just completely tied in my higher time frame, it's going to be just a cakewalk to recognize the start and the initiation of the market maker buy model. I'm just going to start buying bullish PD arrays that are formed along the buy side of the curve, en route to a previous daily high or a low-hanging fruit objective point, which was this resting high here. Now, obviously, this can be confusing to most people, but this is the bare minimum that you should be doing when it comes to your executions. You should always be creating a plan and you should always be trading that plan. You should not be going outside of your rules. You should always be doing your analysis to a point where it's so obvious as to where price is going to go. And if it's not, and you have to really think about it, look at the charts for more than 10 seconds. And if you can't understand where price is going to go, move on to the next pair, because that's what it was like for me this day with gold, NASDAQ, and the S&P 500. I looked at the charts. I didn't know where price was going to go that day. Therefore, I moved to the next pair. And if I don't have anything on any of the pairs that I analyze and I trade, I don't care what price is going to do, because I'm not putting myself in a place where I'm vulnerable to lose money because I'm going outside of my rules. That's the biggest takeaway that I want you guys to understand here is your checklist behind buying and selling is like your golden script. If X, Y, and Z happens, then I will do this. If X, Y, and Z doesn't happen, then I won't do this. It's as simple as that. The only reason why you're failing is because of yourself. You're literally just neglecting your own rules and you just feel the need to press the button every single day. That is why you are staying in the same spot and you're not excelling and you're not getting to the point where you want to be at. Just follow your rules and you will get there in due time. Just don't put the timestamp on your success. Because if you say to yourself, oh, I'm going to be profitable in 3 months. Oh, I'm going to be profitable in 6 months. But when it gets to that 3 or 6 month mark and you're not to the point where you want to be at, you're going to feel discouraged. And then you're going to think to yourself, is this for me? Should I quit? No, you're just being impatient and you're not accepting the journey as much as you should be. Now take this whole video as a completely different approach as to how I usually do my trade breakdowns. I wanted to go more elaborate into this. I wanted to go more extensive and completely top down in this journey as to how I'm actually able to capitalize on the moves that I do, because not every single trade that I do looks just like this, but you have to adapt, especially in the current market conditions that we're in right now. Now I called this entire move out to my Discord live in action. The whole thing was timed out, my stop loss, my take profit, my execution, everything. If you do want to trade with me live, there's a link in the description, as well as a accountability factor that I'm also doing with private students. If you are struggling and you're in a rut in your trading, I can be somebody that looks over your shoulder, that helps you out to give you that push to get to the point of profitability. Another link in the description of the video. But if you like these styles, if you like the psychology rants alongside of the trade breakdowns, I will be more than happy to yell at you behind your computer screen while watching this video. But like always, leave a like, comment, and subscribe. It means a lot on this journey, and I just want to make sure that you guys are learning from the content that I'm putting out. But Godspeed, good luck, good trading for the rest of the week, and I will see you guys next time for the next upload.